Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about COSCO SHIP ENGY interim report. COSCO Shipping Energy Transportation Co., Limited, provides a range of businesses and services including oil transportation, liquefied natural gas, LNG, transportation vessel chartering, shipment of liquefied petroleum gas, shipping agency, services ownership and operation of oil tankers with a total capacity of 23.74 million deadweight tons, DWT, investment in LNG vessels, including those with capacities ranging from 8.42 million cubic meters to 174,000 cubic meters. The stock price of COSCO SHIP ENGY has increased by over 17.25% in the past year due to a combination of factors. A significant gain in VLCC freight rates, driven by institutional optimism and supported by data showing a 113% year-over-year increase, contributed to the surge. The company's plans to issue A-shares to raise funds for fleet renewal and expansion also boosted investor confidence. Additionally, increased oil tanker demand due to OPEC Plus production, J.P. Morgan's overweight rating, and increased institutional investment from BlackRock further supported the stock price growth. These factors collectively contributed to COSCO SHIP ENGY's stock price increase in the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth drivers. International crude oil and LNG shipping have contributed significantly to revenue growth, with a 12.8% increase in revenue from international crude oil and a 49.6% gross profit margin increase in LNG shipping. Expansion into global operations, securing cargo from Canada and Australia, and conversion of small and medium-sized tankers have also driven revenue growth. Revenue decline drivers. Domestic product oil and international product oil have experienced significant declines in gross profit margins, contributing to a 19.9% decrease in gross profit margin for international product oil. The domestic shipping segment has seen a 4.1% decrease in profit margin, while the international oil shipment business has experienced revenue and gross profit decreases. Revenue neutral. Oil transportation revenue has remained relatively stable, with a 1.4% increase in 2025 compared to 2024. Net income and profit margins decline. A summary of changes: the company's net income has experienced a significant decline, decreasing by 29% year-on-year. This downward trend is also reflected in profit margins, with gross profit margin decreasing by 9.3 percentage points. The EBITDA margin has also declined by 12.5%. These changes are evident across various segments, including domestic and international oil shipping, LNG, LPG, and chemical shipping. The decline in net income and profit margins is a concerning trend for the company. While some segments have seen an increase in profit margins, such as chemical shipping, others have experienced significant declines. The reasons behind these changes are not specified in the provided summaries, leaving room for further investigation into the underlying causes of this decline. The company's financial performance indicates a positive trend in its operating cash flow, with net cash from operating activities amounting to RMB 3,079,612,000 and an operating cash flow of RMB 3,692,453. The company is successfully generating sufficient funds from its core operations. This suggests that the business is financially stable and capable of meeting its obligations. The company's debt level and interest expenses have undergone significant changes. Initially, the total debts increased by RMB 285,555 from RMB 36,165,624 to RMB 37,451,179, page 21. However, this trend was reversed on page 26, where the total debt level decreased from RMB 31,836,699 to RMB 29,401,764. Furthermore, on page 94, it is stated that the debt level has decreased by RMB 134,910. Regarding interest expenses, there are mixed signals. On page 73, total interest expenses increased by RMB 14,999 from RMB 721,919 to RMB 736,918. Conversely, on page 81, interest expense increased by 7% from RMB 23,100,000 to RMB 24,907,000. Additionally, on page 94, it is mentioned that interest expenses have increased due to higher balances placed with COSCO Shipping Finance. The company's financial performance in 2025 reveals a mixed picture. In terms of segments that performed poorly, LNG shipping, LPG transportation, and chemical transportation were the underperforming areas. These segments saw decreases in revenue across the board. On the other hand, oil transportation showed some improvement despite a decrease in assets by 8.1%. The segment's liabilities increased by 9.6%, indicating potential financial strain. Notable changes were also observed in LNG shipping and LPG transportation. While LNG shipping saw an increase in assets by 34.3% and a decrease in liabilities by 0.2%, LPG transportation experienced a significant increase in liabilities by 69.4%. Overall, the company's revenue performance was down across all segments, with oil tankers experiencing the largest decline of RMB billion, 103,512,000. Management's outlook and strategy. The company's management emphasizes the importance of corporate governance in driving value-driven management. A strategy committee oversees the overall strategy to ensure alignment with the company's goals. Currently, there are no significant investments planned for material capital assets. However, the company may issue a shares or mid-term notes depending on future developments and market conditions. Concerns over supply chain disruption loom large. There are indications that the company may face challenges in its supply chain operations. Specifically, delayed delivery of vessels under construction, page 6, and a challenging replenishment task, page 31, could lead to potential disruptions. Furthermore, lower inventory levels suggest a possible buildup or shortage issue, which may exacerbate the situation. These concerns warrant close monitoring to mitigate any adverse effects on the company's operations. That concludes the financial summary for COSCO Ship ENGY. Feel free to comment below, and I will be happy to answer them when possible.